Welcome, it's Sarah Larby, guest, host, and producer on Everyday Investor. And today we are speaking with Peter Politis from Greybrook, and there is going to be a lot of information. So grab your pens and papers and don't go anywhere. We will be right back after the break.
Yeah, so we focused, again, on development. So development's a little bit different than how most people think about investing in real estate. Most people buy a home, a townhouse, a plaza for cash flow, appreciation, or some combination of the two. And really what we try to do is try to create a manufacturing margin by coming in, buying land in partnership with large developers, building homes, townhouses, condos, or in some cases just taking land through an approval process and making a manufacturing margin at the end of the day. So we really look at investing in real estate as manufacturing.
Hey everyone, it's John Tembering from Blackjack Contracting. This week's tip is about getting advice on pricing for your project. I hear it too often where the customer will listen to their real estate agent or a buddy that had a renovation done 3 years ago, and they'll get, you're doing this type of project. How much is it going to cost me? Oh, it's going to cost you 30, 40 grand. And all of a sudden you start talking with contractors, it's double, not triple that. It's super important that you're working with people that at least have a general idea about pricing. Have a great partnership with some contractors or home inspectors, somebody that really understands the industry. If you go and work with a virtual, like a contractor virtually, take some photos, videos, and then send it over by email and get at least to get a virtual pricing, you're going to be in so much better shape than getting bad advice. Nothing can ruin a project, especially for a BRRRR project, than getting bad advice on a project, running your numbers, the deal makes sense, and all of a sudden it doesn't. Work with a great contractor, understand the numbers, and you'll have a better luck thing. Have a great week.
The mortgage world has changed. Has your advice? Are you looking for a modern approach to your mortgage planning process? Advice tailored to your unique, ever-changing circumstances? Whether you're upsizing, downsizing, purchasing, or refinancing, the Kyle Ford Mortgage team works with individuals and companies to custom tailor the right mortgage product for you. Working with a wide selection of lenders, we're here to serve our clients and help them achieve their real estate and retirement goals. Contact the Kyle Ford Mortgage team today, Canada's mortgage choice.
Hey guys, Omar Khan here from Theta Trading. I want to give you guys an analogy of what options are like if you were to use the real estate world. Now imagine you go to Fantasyland, Ontario, and you look at buying a property. Let's say it's $500,000. I know they don't exist anymore, but let's just say they did. You go and you say to the homeowner, homeowner, I agree with you. Your house is worth $500,000. And before doing that, you've done your homework and you think the house will be worth $550,000, let's say a year from now. Now your choices are that you can buy the house now and you can wait for it to go up. But in the options world, imagine you could have just agreed to buy the house for $10,000 less. You tell the homeowner, I'll take the home off you for $490,000 in the next 30 days. But in exchange for you guaranteeing that $490,000 price, the homeowner, let's say, has to pay you $25,000 for the month. Is that a deal you'd take? You know you want to own the house. That is how the options market works. We simply get paid a lot of money for agreeing to buy stocks we would be buying anyways. And I hope that analogy helps you in terms of how options can be used. That's just one strategy, but that's a strategy we use here day in and day out at Theta. So if you want to learn how to buy your stocks at a discount and get paid for it, please feel free to reach out. Otherwise, we'll see you guys next week. Take care.
Welcome back. Peter, it is a pleasure to have you on the show. How are you doing today?
Very good. Thank you for having me.
Awesome. So, I'm new to, what you're doing, and this is the first time I'm interviewing you, so I'm going to ask you tons of questions today, but first and foremost, who and what is Greybrook?
Greybrook is a private equity firm, and we focus on investing in real estate development, where we try to partner with some of the largest real estate developers across Ontario and in the US to try to generate returns for our investors.
Okay, all right. It sounds simple. And when you're saying investors, who are the investors?
Yeah, over the years, I've been doing this for now 18 years. We've accumulated over 8,000 active investors in 32 different countries. Investors can range from professional athletes and entrepreneurs to doctors, lawyers, teachers. We have a wide range of investors at the end of the day. And part of that is because we kind of have a portfolio-based approach to investing. So what that really means is that it's not our job or our intention to get someone to invest in a development project. We try try to create a portfolio of different types of investments across different types of developments for our investors.
Okay, all right. So, multifamily, something different. What are some examples of these types of properties?
Yeah, so we focused, again, on development. So development's a little bit different than how most people think about investing in real estate. Most people buy a home, a townhouse, a plaza for cash flow, appreciation, or some combination of the two. And really what we try to do is try to create a manufacturing margin by coming in, buying land in partnership with large developers, building homes, townhouses, condos, or in some cases just taking land through an approval process and making a manufacturing margin at the end of the day. So we really look at investing in real estate as manufacturing.
Okay, all right. And is this in, across Canada? Is this, south of the border as well? Like, where are you looking for this land?
Yeah, so we focus our investments both in Canada and in the U.S. In Canada, we focus, I'll say, in the Greater Golden Horseshoe, or the ever-expanding Greater Golden Horseshoe. So we have about 60 or 70 active projects currently in the GTA, and that can be condo developments in the downtown core. It can be townhouses and single-family houses in Durham, or estate homes in Kleinburg, or things in Cambridge, Guelph, Kitchener, Waterloo, or those areas. So really, we're across broad southern Ontario, and there's reasons for that. I mean, there's a lot of demand driving factors and supply constraints around building homes in the GTA. In the US, we focus on condominium, but also mostly multifamily, which means that we buy land, we build rental buildings, we lease them, we tenant them, and then we sell them upon their completion. And we're focused in, I would say, South Florida, Atlanta, we're in Denver, we're in Nashville, we're looking in Texas, and in Charlotte actively.
Okay, all right, so many different parts of the U.S., many different areas of Ontario, I guess mostly within the GTA or the Golden Horseshoe. I'm just curious, because obviously, these all sound like areas that many of us are probably familiar with. Are there things that you look into in order to pick an area, like market fundamentals, and give us some insights on what that looks like?
Yeah, I think the area that we focus when we look for opportunities is traditionally around geographies of those areas. So I'm doing what we're doing in, let's say we have a development in Fergus, would I be wanting to build a luxury high-end condo in Fergus may be a little different than a luxury high-end condo, say, in Yorkville in downtown Toronto, right? So we think that there's certain demand factors that are driving the Greater Golden Horseshoe as an example, as long as we pick the right product for the area. And that's really kind of our focus. So the person who's buying a townhouse in, let's say, Curtis or Oshawa might be a different demographic than an investor or a purchaser who's buying a condo in downtown Toronto, or a 7,000 square foot estate home in Kleinburg. And as long as we marry the product type with the geography and a lot of other things in terms of what makes successful development, we think that there's a room for everything like that in our portfolio.
So it sounds like you're doing many different types of projects. How do you pick the partners? How do you pick, maybe the builders? How do you even pick if you're going to just develop it and sell it off, or go through the entire process?
Yeah, I mean, I start by saying our job is to be in the making money business vis-a-vis real estate. So we can have a plan, but these developments will typically be 3, 5, 7, 10 years long or more, depending on size, scale, location, and the kind of land. So at the end of the day, what we really look for are projects of a certain scale. Currently, we have maybe about $25 billion under development across our portfolio. And some of the development partners that we use are some of the biggest and the best in the industry, both here in the GTA and in the US. So our active partners here, just to name a few, and I'm not naming favorites in full disclosure, like Tribute Communities, Citizen are our partners. We've partnered with Fernbrook Homes before, the Sorbara family, Fieldgate, Treasure Hill, groups like that. And I'm missing many, but I think the idea is that we're trying to partner with the biggest and the best who have a combination of expertise, balance sheet, and infrastructure. Because at the end of the day, one of the things that I've learned about investing is it's really, at the end of the day, you're investing in people. You can have a great piece of land, the wrong people, it won't turn out good. It can be a great business idea, the wrong people executing it won't be successful. So we start by trying to partner with the biggest and the best. And that's important as an investor, is between us and our development partner who's going to work for you every day, we think there's a lot of expertise there. And then in terms of what we look for in terms of what we do with the properties, I mean, we buy land sometimes and take it through an entitlement process, approve it, and sell it. Sometimes we buy approved land to make a build margin and move on. Sometimes we do both. At the end of the day, these developments take years to complete. And having a business plan on day one and saying that's my business plan no matter what for the eternity of time, we just don't think is really realistic or something that's prudent to do. So we sometimes we go in with one intention and we do another, but that's usually because it's in the best interest of our investors and the return is worthwhile in terms of making a pivot to our plans.
Okay, that makes sense. Now, you mentioned you have about 8,000 investors, doing different types of projects. Somebody sitting at home right now, how can they get involved in something like this?
Yeah, I mean, we look at ourselves really as an asset manager. Someone comes in and says, I want to invest in real estate. We'll sit down with them. We have a team of people that will explain to them, the pros, the cons, the risks, the return profiles, understanding their, in terms of investment goals, dollars they want to deploy, and we'll make allocation suggestions for them. At the end of the day, everything we do is on a project-by-project basis. So an individual investor can choose the developer, the location, and the duration that they're investing in, not unlike you can pick a stock that you want to invest in. But our job is really to create a diversified portfolio across product types, developers, geographic locations. So, maybe estate homes somewhere and townhouses are affected differently throughout time than condos, and maybe luxury condos are affected differently than investor condos, say in Liberty Village, where we finished for 6 buildings already. So for us, it's really about getting to know our investor, getting to know how much their time horizon is, and how the different investment times may meet their goals.
Yeah, absolutely. I mean, everyone's going to have, like you said, different goals, different time horizons, probably a different investment amount as well. Like what's the range or what's the minimum investment amount?
Yeah, our minimum investment on a per project basis is $25,000 and not in increments thereof. There's certain qualifications that go along with the securities commissions that we'll put everybody through in terms of a know your client form, which is standard when you're making investment these days. But we set the minimum investment relatively low when you're talking about dollars to invest in real estate for a few different reasons. One, even if somebody had $100,000 or $200,000 they wanted to deploy, we can get them in 4 or 8 different projects. And it's kind of happened organically. Like everybody invests on the same terms and conditions. So whether it's myself and my family, whether it's you or somebody sitting at home, they're getting the same return on any project that anybody else gets. So what we've learned is over time, as you get into more projects, because they take years to complete. Everybody wants them to be finished in 6 months or 12 months. Most people who invest in real estate aren't looking for 6 and 12-month investments, but they understand it's more longer term. But after spending a few years deploying investments, they start finishing, and then kind of a non-cash flowing investment like development really becomes a cash flowing one as projects finish over time.
Mm-hmm. So this is definitely different than just a fund that you're putting your money in for a fixed type of return. Is this an equity and a cash flow play for many of them, or how do you compensate the investors?
Yeah, so it's an equity investment. So it's not debt. We're not lending money to somebody. We're not saying, here, pay us a prescribed interest rate. At the end of the day, we put up a portion of the money. Our development partners put a portion of the equity required, mostly to buy land and kind of pre-construction soft costs. By the time we get through our approvals and our pre-sales, that's when the bank comes in and gives us either a servicing loan for homes or a servicing construction loan for houses and condos. So we're equity investors, and at the end of the day, we split the profits 50-50 with our development partners. So when they make $1, we make $1. At the end of the day, we're compensated like principals, but don't have to worry about putting up more money. The project needs more money, but we don't have to worry about guaranteeing or getting construction loans from the bank. Those are all the responsibility of our development partners.
Got it. Now, what about like any risks for investors, right? If they're investing $100,000 or $200,000 or even $25,000, what are the risks to them? Yeah,
I mean, development's a very nuanced thing. So I start by saying the kind of land that we buy, we don't take what I'll refer to as entitlement risk, which means we don't buy an employment or industrial piece of land with intentions to turn it into residential, as an example, because zoning is a very complicated thing, particularly in Ontario, and that's something that we don't do. So that level of risk we don't do. But time and illiquidity I refer to as being the 2 biggest risks. What I mean by that is development timelines over the last 20 years that we've been doing this have extended. Approval timelines that used to take me 9 or 10 months with the city 10 or 12 years ago are 2 to 3 years in timelines, and that's just kind of organically happened as the red tape is built, which is really adding to the supply shortage. So, but at the end of the day, if you use responsible amount of leverage, if any, when you're buying something, your equity and you have big partners, we like to think that at the end of the day, those are your biggest risks. Now, doesn't mean that people are immune from crazy shocks. If the market drops by 25% in a day, and other issues that come along with them, there are. But we've had a very good track record of delivering really outstanding returns for our investors.
Yeah, amazing. So obviously we talked about the risks. We're going to talk about some of the benefits when we come back from break. But before we do, just a question about what happens if an investor needs their money back for any reason, like mid-project. Like what would that look like? Yeah,
I think that's what I call the biggest risk. Is if somebody needs their money back, it's a 4-year or 5-year project, and they don't get it back in 4 or 5 years, something bad will happen. It's probably not for you. Not that we can't try to, from time to time, facilitate somebody getting their capital out, but it's not a guarantee. It depends on the world, and at the end of the day, that's something that people have to be ready to withstand. And to be perfectly honest with you, our experience in 2008, 2009, the illiquid aspect of our investments probably saved people from themselves. So many people were in the stock market and they were down 10, 20, 30, 40, 50%. They sold their stocks for obvious reasons. They were nervous, and then if they had kept it through, they would have all come back and been better off at the end of it. There would have been a lot of people that would have taken their capital out of some of our developments in 08, 09 if they could have. They couldn't, and at the end of the day, not only did our developments perform, but they outperformed some of our original projections in terms of total returns, annualized returns and all those things. Because typically, time can make up a lot of things in terms of value for real estate.
Mm-hmm, absolutely. There's market cycles, and if you don't sell and you hang on, your loss isn't realized. And so that was very informative. And you at home, don't go anywhere. We will be right back.
Hey, it's Kyle from the Kyle Ford Mortgage team. I want to talk to you guys about what to do in a rising interest rate environment. I'll start with what not to do. Make sure you're getting advice from a person who represents you and your interests. Going to the bank that holds the mortgage is likely not the person that's going to best represent you in this decision. I want to give you an example here. What is a mortgage? A mortgage is a bond that's sold on the open market, which means when you go in to lock in your rate, you're not locking in the rate for your benefit, you're locking in a higher return for the bank's investor. These are the type of things that you want to be thinking about when making these decisions. Make sure you're working with an independent agent or broker that has your interest in mind. Ask about products like static variable, ultimate cap variables, or shorter term mortgages like a 2 or a 3 year. If the rates are keeping you up at night, make sure you're talking to a professional who can help advise on the best needs for you. If you have questions on how this works, don't hesitate to reach out to myself and the Kyle Ford Mortgage team.
You've always dreamed of having rental income, but buying a rental property? Well, that's a tall order. Capitalize on the space in your home instead. Renovate and rent out that space with ease with LegalSecondSuites.com and the team at Wise Construction Group. With LegalSecondSuites.com, our talented team of BCIN designers, engineers, carpenters, and tradespeople can transform that unused space into a beautiful, legal, and safe rental unit. We're empowering the everyday homeowner to become an extraordinary landlord. Get more out of your home. Visit LegalSecondSuites.com for more information.
Costas Cavellos, founder of First Access Condos. Now, in our world, there are numerous investment opportunities and schemes that people pitch to you daily. Which one do you choose? Which one is right for you? Now, when it comes to investing, you want to invest in something that there's a great demand for, but not enough supply. And everyone knows, in Southern Ontario, the one thing that's in short supply is housing. First Access Condos lets you buy today and reap the benefits in the future. Pay today's prices to invest, sell at tomorrow's prices. That's the beauty of pre-construction condos, and we are First Access Condos.
Welcome back. We are speaking with Peter from Greybrook. We talked about some of the risks and many of the projects that you're looking at, but let's get into some specifics now. But before we do that, there's definitely advantages. There's, I think from a passive standpoint, right? Like I'm a very active investor where I'm very hands-on, but if somebody wants to be a little bit more passive, to me, that would be a great benefit. What do you think in your end from benefit-wise?
Yeah, I think that there's a couple of important principles that I always talk to people is that you can be an active investor, but at the end of the day, everyone needs to have some portion of their money working for them because you're limited by hours in a day. So it doesn't matter whether you want to be active, whether it's real estate or something else, there's so many hours in the day, there's only so many things that people can do. It's important to have their money working for them. And at the end of the day, this is what this is. This is I joke that it's a passive investment for everybody but myself, because we're there working every day and they're not. But I think at the end of the day, that's one of the goals for us, is that it's how can I make a meaningful amount of money in a space that I want? How can I get involved in projects that have the largest economies of scale? These are hundreds of millions, in some cases $1 billion worth of developments with the biggest and the best people every day. How can I do that? And we provide that access and that oversight and that ability for people to do that. So it's definitely passive for our people. There are some certain tax advantages that are a little bit different that I won't get into in terms of today for our investor than, let's say, traditional income. It's taxed a little bit more efficiently. And also our projects are RSP, TFSA, LIRA, all those things eligible. So capital that traditionally may not be able to find its way into investing in real estate is able to through our structure.
That's amazing. And I think many people don't know that you can invest in real estate using registered funds. And can you just walk through a little bit of what that process looks like and where the funds have to go to in order to make it work?
Yeah, I mean, the good news is I'll say that Greybrook's a full service firm. So if someone comes in and wants to make an investment through their registered plan, we have a whole team of people that will coordinate with custodians and transfers of funds. And outside of filling out some DocuSign paperwork for people, it's really quite a simple process. It's kind of a funny story. 15 years ago or a little bit more, when we made our first RSP eligible investment, I was trying to figure it out for my own RSP, and the paperwork was like insane. And I'm like, oh my God, I don't want to do this. Like, oh my God, I'm the CEO of the company, I don't want to do this. No one's going to want to do this. So we have to create a full service vehicle that essentially takes all the documentation and the process out from people's hands and makes it really carefree. And that's part of what the service provides.
Amazing. So you could use regular cash, savings, whatnot, but you could also use registered funds or a combination of.
A combination of, and you can also use TFSA or invest through a corporation. A lot of people have money that they keep in an investment corporation or a personal corporation that's active that you can use. And really our goal is to basically double our investors' money kind of every 5 years. Like that's kind of the return profile that we're looking for. Now, some projects might be shorter than 5 years, which would mean that the returns would be slightly less than a double. Some can be longer, and our expectation should be that they're more than a double.
Okay, so like range, obviously we can't speak about specifics, but range of like average returns.
Yeah, we're trying to do a simple 20% on an annualized basis. So basically, if you're investing $1, you want to get your dollar back plus $1 in profit over 5 years. 100% ROI divided by 5 is a simple 20% annualized return.
Okay, and when is that payment? Is it at the very end when the project's completed, or are you paying these out on a quarterly or monthly basis?
Yeah, I mean, there's really no cash flow in development. Anybody who comes in and says that my development is providing with cash flow, I mean, it's typically financial engineering. There's nowhere for the cash to come from. There isn't a building, there isn't income, there isn't tenants. Notwithstanding, we have bought some properties that have income at the start of the development. We really make our money when either we're selling the land, if it's approved, and that's when we're moving on, or when people move into their houses. The biggest question that I get asked is, do I have to wait till the last condo is sold or the last house is sold or closed before I get my money? And the answer is no. As people move in, we pay back the construction loan from the banks, and then we start making distributions. So our projects, even a small project with 100 or 150 units, which is kind of the smaller end of anything that we would do today, might have 3, 5, 7 different distributions as we're going over time. So as soon as money comes in, we're making distributions, they're out.
Okay, all right. So I mean, the returns seem like they're definitely better than just putting your money into a mutual fund with MER fees. But speaking of fees, are there fees involved? So if somebody has $100,000 as an example, like are there fees that they also have to account for?
Yeah, so a couple things. All the returns that we're talking about are net of any cost. At the end of the day, while there is some few fees about raising the capital, when somebody invests $1, they get credited for investing $1, and all the returns are based off that. We really, at the end of the day, get a portion of the profits from the development. That's why we're in it. So the investors get a portion of the profits, the developer gets a portion of the profits, and we get a portion of the profits. So we're working there at the end, trying to make it the most profitable for everybody. And this is actually something that I talk a lot about. Our job is to not make the most profit at every expense. we are risk managers at the end of the day. There's times where we've sold stuff and made a little bit less money earlier because we thought the risk going forward wasn't worth it. There's times where we've really gotten all of our money out and we're well into the profit and it's all gravy from here, where we're willing to take more risks to get higher dollars and take more time. Like, we're risk managers. Going after the highest total dollar at every expense is just not a business strategy that we have. And frankly, we couldn't be doing this for 15 or 20 years if that's how we looked at the world.
Absolutely. I mean, managing risk, especially in these times where we don't really know what's going to be happening in the next year or two. What are, some of the things that you are doing with Greybrook to mitigate that, with, I think, uncertainty for the next couple of years?
Yeah, I mean, we got a few things that are beneficial for us. One, the size and scale of our partners and ourselves as an organization allows us inherently to be able to manage more risk in terms of whether it's trades or banking relationships or those things. I mean, scale and help relationships go a long way. How much leverage, if any, we're using to buy properties is very important. Now, also who we're buying these properties with, in terms of if projects need more money than we have put into it, it's our developer's obligation to put it up by way of non-dilutive loans. What that really means is I can't come and ask you for more money. I can't say, oh my God, this project needs more money came in, and now you own less of the project than you started. So structure and who our partners are have a lot to do with managing risk. And at the end of the day, it's really staying power that we try to do. Now, there's some things that are outside of everyone's control. Interest rates moving up faster or slower is outside of our control. Sometimes construction trades, cost of construction, supply chain demands and issues. We had an issue on a site where our appliances were supposed to come in and our appliances were delayed. These are real things that are going on around the world. I joke with everybody, someone's like, oh, this one's taking a little longer, that one's happening a little quicker. I said, try to finish a basement reno. We're talking about building 500 condos at the end of the day. So, some of these complications are real, but that's really what we're born to do. And I tell everybody there's things that we didn't think of that are going to happen throughout the course of development. Our job is to go in and deal with all these issues on your behalf and make the best possible decisions for you.
Mm-hmm. So it sounds, it's good because many partnerships or many opportunities, you also have to absorb the cash calls or the downsides, which sounds like you guys are managing that risk for the investors. But you're right, there's a shortage of labor, there's a shortage of materials. You probably tried to get windows, in the last little bit. That's many, many, many weeks of delays, and hopefully it gets better. What are some projects that you're excited that you're working on these days?
Yeah, we got a few different projects that I like. It's like your children; you love them all equally for different reasons. But there's a few things that we're working on that I think is really exciting. We have a very large development in partnership with Citizen and Turcotte and Fernbrook in Hamilton called Pier 8. It's a partnership with the city. It's 20 acres on the waterfront that we're developing there into many towers. So that's one that I'm very excited about. We have an ultra luxury development in Yorkville at the corner of Yorkville and Avenue Road, where the units are ranging from 2,500 to 10,000 square feet in size. That's going to be ultra high end. And we have so much going on in Durham region that we're very bullish in that area. We've got about a dozen developments that can range from homes, townhouses, condos, and back-to-back units out there. So I think we're excited about all these different stuff for different reasons, and part of it is just where these projects are at in the cycle in terms of they're now coming to fruition and coming to sales now. So there's a lot of interesting times for us here in Toronto.
Okay, all right, amazing. And you've got some projects as well that you were mentioning in the U.S. Talk to us about those.
So we're very excited. We're breaking ground shortly on the Waldorf Astoria residences in Miami. It's the tallest building in Miami. It's actually the tallest building south of Manhattan. It's a partnership with the Waldorf, our partner Property Markets Group, PMG, and ourselves, where over 85% of the units are sold out, and we're really starting to get it rolling down there. So that's exciting, and I'm excited about our Society platform, which is our rental multifamily platform in the U.S. We're breaking ground in the artsy area of Miami called Wynwood, which we're under construction right now. We've got a project that we're starting construction shortly in Atlanta and Nashville, and we're not too far behind in Denver. So there's never a shortage of things to do around the office.
Very cool. So if somebody wants to invest in the US and Canada, or is it a different process?
The process is the same. People always ask, do I have to file income taxes in the US? And the answer is no, unless you already do and you want to for some reason. We make it look essentially not too dissimilar from investing here in Canada, other than the projects are located in the US.
Amazing. That was super insightful. We will put your information there for our listeners to be able to reach out and find out more. I know Rav invests, with you as well, and many people that I know too, and you guys have a great reputation. Thank you so much, Peter, for being on the show.
Thank you for having me. It was a lot of fun. Hope to do it again soon.
Awesome. And thank you for tuning in, and we will see you next week.